All right, everybody, welcome back for another deep dive.
Yeah, great to be here.
You know, I was looking at the headlines this week, and I just thought, man, some of this stuff can just sound so scary,
Yeah.
right? Like you see the word recession, you think, oh no, what does this mean for me? What does this mean for my investments?
Right.
And I bet, a lot of our listeners out there feel the same way.
Absolutely.
So that's what we're going to try to do today is just break down some of these recent headlines about potential U.S. economic troubles. We've got some great articles here from the Financial Times, the Wall Street Journal, and Barron's, and we're going to kind of see what they have to say and what it might mean, especially for those of you out there who are just getting started with investing. So I guess let's just jump right in. The Financial Times had this article, the U.S. economy is heading for recession.
Okay.
So I know, this word recession gets thrown around a lot.
Yeah.
I think it's helpful to take a step back and just think about, what does that actually mean? Like, what does it mean for everyday people?
Yeah. So a recession really just means that the economy is shrinking for, a sustained period.
Right.
It's usually like 2 quarters in a row or something like that.
Okay.
And so, a lot of people will talk about negative growth or whatever, but just think of it as like a slowdown in economic activity.
Yep.
So that can mean a bunch of things for everyday life. It can lead to job losses.
Right.
It can lead to businesses closing down. People might start spending less.
Yeah.
They're tightening their belts, So it can definitely have a real impact.
Okay, so the Financial Times article is pointing to these rising tariffs as being a big part of this recession fear.
Yeah.
Can you talk about that a little bit? Like how are these tariffs contributing to that?
So tariffs are basically taxes on goods that are imported from other countries.
Right.
And so when you raise tariffs, it makes those goods more expensive for consumers here in the U.S. And that can kind of discourage trade.
Gotcha.
It's like you're putting up a barrier to trade.
So it's throwing off the balance.
Yeah, exactly. It's like a seesaw.
Okay.
If you put too much weight on one side, it's going to tip over.
Right.
And so these tariffs are kind of disrupting that balance of trade.
Gotcha. That makes sense.
Yeah.
Okay, so the Wall Street Journal had this article, and title was kind of interesting. It was Markets Finally Woke Up to Tariff Reality. Is This a Buying Opportunity?
Interesting.
And I thought that was interesting because it seems counterintuitive, right?
Right.
If things are going bad, like why would now be a good time to buy?
Right.
What were they getting at with that?
Yeah, so the idea of a buying opportunity in the stock market is that when prices drop because of fear or uncertainty, that can create a situation where you can actually find some really good deals.
Right.
It's like when your favorite store has a sale, you can get things for cheaper than you normally would. And so some investors believe that even though there's a lot of fear about a recession, there are actually some really good companies out there that are being undervalued because of this fear. So they see it as a chance to buy low, hoping that prices will rebound in the future.
So it's all about like recognizing value in the midst of like the craziness.
Finding those diamonds in the rough.
Gotcha.
Yeah.
The article also talked about focusing on these defensive sectors.
Yeah.
Can you talk about what those are?
So defensive sectors are industries that tend to be more resilient during economic downturns.
Right.
So these are things like consumer staples,
right,
things that people need no matter what's going on in the economy.
Like food?
Exactly. Food, toiletries, healthcare utilities.
Right.
These are things that people are always going to need.
Okay.
So the thinking is that these companies might not be hit as hard by a recession as some other companies.
Right. That makes sense.
Yeah.
All right. So it seems like, some people see this as a buying opportunity.
Right.
But then our final article from Barron's, investors fear a slowdown, strategists don't think they're wrong, suggests that even seasoned investors are feeling really uneasy about all this. So what's going on there?
Well, Barron's highlights that it's not just about tariffs.
Okay.
There are a number of other factors that are contributing to this fear of a slowdown.
Okay.
Things like weak job growth, cuts to government spending, and policy unpredictability.
Gotcha.
All of these things can add to the uncertainty and make investors nervous.
So it's like a bunch of different things kind of all happening at the same time.
Exactly. It's like a perfect storm brewing.
Okay.
It's not just one thing. It's a combination of factors that are weighing on the economy.
So I guess the question is, for someone who's new to all this, what's the takeaway here? Like, how should we be thinking about all of this?
Yeah, that's a great question. So the first thing to remember is that investing always involves risk.
Right.
There's no way to completely eliminate risk.
Okay.
But that doesn't mean you shouldn't invest.
Right.
It just means you need to be aware of the risks and make informed decisions.
Okay.
So the key takeaway here is that it's important to diversify your investments.
Right.
Don't put all your eggs in one basket.
Okay.
Instead, spread your money across different types of assets like stocks, bonds, real estate, things like that. This helps to reduce your overall risk.
Okay.
Because if one investment does poorly,
right,
the others might do well, and that can help to cushion the blow.
So don't panic sell everything.
Yeah.
If one particular stock is down.
Stay calm, stay the course.
Stay the course.
Right.
Okay.
Yeah.
And I guess the other thing is that, we've talked about this before, but investing is a long game.
Absolutely.
It's a marathon, not a sprint.
It's not about getting rich quick.
Right.
It's about building wealth over time.
Right. All right. Well, this has been really interesting.
Yeah, this was fun.
I think we took some of these headlines that sounded kind of doom and gloom or made them into something that's actually actionable.
Absolutely.
So before we go today, I want to leave you with one final thought to ponder.
Okay.
We talked a lot about the U.S. economy, but, we live in a globalized world.
Yeah.
Everything's interconnected.
For sure.
So how might a potential recession in the U.S. ripple out and affect other economies around the world?
That's a great question.
That's something to think about.
Yeah, definitely something to consider.
All right. Well, that's all the time we have for today.
Okay.
But as always, keep learning, keep asking questions.
Yeah. And if you need help, don't be afraid to reach out to a financial advisor.
Great advice.
They can help you figure out what makes sense for your situation.
Awesome. Thanks for joining us.
Thanks for having me.
We'll see you next time.
See ya.